Kicking off section 2 here, Bitcoin 2021 Pitchday. We have 5 companies presenting. This is kind of our infrastructure-focused segment. If I can pull up the order. All right, presenting first, D2X Group. If you can come to the stage. I'm going to pause you at the stage for 1 second, too. Let's actually kick off with an introduction of the judges. So your mic should be on. Let's go my right to left. If our judges could introduce themselves. This is who's going to be going back and forth with our panelists and picking the winners, obviously. So first.
Hello. Hello, hello. This is, my name is Christopher Calicott. I'm Managing Director for Trammell Venture Partners. We're a VC firm based in Austin, Texas. We invest in deep tech, things like security, privacy, and applied AI. We think that we're probably the first VC firm that has a new series of funds specifically dedicated to backing founders building on the various layers of the Bitcoin protocol stack. So not blockchain, not tokens, Bitcoin. And so that's what we're doing.
Hey everyone, my name is Tyler Evans. I'm the co-founder of BTC Inc., the host of this event, and I'm also the managing partner of our asset management arm, UTXO Management, that makes liquid and illiquid digital asset investments.
My name is David Lee. I run an investments and M&A group for Samsung. I'm not quite sure why everybody's taking pictures of me, but it's great to be here. I've been an investor in Bitcoin-related companies since 2013 at other firms, and at Samsung we're excited in supporting this ecosystem. Companies like Dapper, Forte, and hopefully some companies here.
I'm Kevin O'Leary, an investor. I'm here primarily because I'm so intrigued that we haven't got the institutional investor into Bitcoin yet, and it's my mission to do so. That's what I do for a living. I index and for global pension plans and sovereign funds, and there's such a huge opportunity if we can just solve this damn ESG problem. We're going to raise a lot of money. Thank you.
Well, Bitcoin is green from my perspective, so we're almost there. So Matt Roszak, founding partner of Calicott, I've been investing in this space since 2012, made over 90 investments in tokenized networks and infrastructure. Also serve as chairman of Block. We create blockchain infrastructure primarily for the DeFi space, and also probably serve as chairman of the Chamber of Digital Commerce, largest trade association in crypto.
All right, thanks everybody. Thanks, Matt. D2X, kicking us off.
Oh, that's the guy.
Clicker up top. There it is. There you go.
Yeah.
All right. Good afternoon, everyone. It's a great pleasure to be here today and an honor to have been invited to pitch at the conference. My name is Theodor Rosenzweig, and today with me is Don van der Krocht, sitting somewhere in the back. We traveled all the way from Amsterdam, Netherlands, to present you D2X, the digital derivatives exchange for European institutions. Don and I are both former derivatives traders. We met for the first time in 2020 while working at All Options, an Amsterdam-based market maker. It was around October time last year when Don suggested for the first time to me, well, if we trade derivatives on equities, why don't we trade derivatives on digital assets? So we thought it was a good idea, and we started researching the topic. The more we looked, the better the business case seemed. But then naturally, we also thought, well, if it seems so obvious, why is everyone not already doing it? That's when we found out that lots of institutions were actually looking to enter the space. However, in practice, institutions were adopting digital assets relatively slowly because of 3 main issues. 1, the lack of liquidity in the space. 2, operational and reputational risks. And 3, more importantly, the absence of regulated trading venues in Europe. Now zooming out for a second, we identified a $15 billion opportunity in the derivative segment of the digital asset space. It probably does not come as a big surprise if I tell you that volumes have been growing exponentially in recent months. But the interesting fact is that there is a sub-segment that's growing even faster, and that's the institutional segment. We believe that thanks to IPOs, CBDCs, and the positive regulatory outlook in Europe, this is only the beginning. So what have the exchanges been doing so far? Well, retail flows have dominated digital asset markets for many years, so it only makes sense that most exchanges focused on that specific segment. They offer a gamified and sometimes gambling-like experience of trading. And what we've also identified is that very few players focus on the institutional segment and none really focus on Europe. So by now you've guessed it, D2X will fill the gap by focusing on the institutional segment in Europe. In order to capitalize on this great opportunity, D2X will become the first EU-regulated trading venue dedicated to derivatives and for institutions. We plan to mitigate operational and reputational risks through clearing and thorough risk management. More importantly, by listing standardized cash-settled derivatives, we will be an easy solution to implement for institutions, and we will fit perfectly the existing financial infrastructure. The D2X value proposition relies on 3 key pillars. 1, more liquidity. 2, more consistency. And 3, less unwanted risks. In practice, we plan to achieve that through 3 of our unique selling points. Not working? All right. So first, by being a regulated trading venue, we will be able to attract large traditional market makers that haven't already entered the space. They will in turn provide more liquidity onto D2X. Second, by programming our trading interface using Rust as programming language, we will ensure that it is always one of the fastest and most reliable. Third, clearing mitigates counterparty risk. However, in practice, it may sometimes make the trading experience less capital efficient, which actually defeats one of the main purposes of trading derivatives. Trading on D2X will enable clearing while always remaining capital efficient. We generate revenues from 2 diversified streams. First, market services, that is trading and membership fees. And second, information services, which include market data and index licensing. In the past 6 months, D2X went from an idea worth quitting our jobs for to a company with great momentum. So far, we've raised a pre-seed round and are now working with top European law firms on the regulatory aspect of our business. We now have working prototypes for core components of our exchange and have received interest from over 10 institutions. In the coming months, we will be looking for a second capital injection in the business. This will allow us to complete the regulatory license application process, and we will then enter into a testing phase prior to our launch, which is predicted for Q2 of next year. We are very lucky to be advised by 5 experts within their respective fields. 2 of our advisors are veterans of the industry, Alain Courbebès being the former CIO at Euronext, and Ernest van der Hout being the former head of risk at the London Clearing House. At D2X, our mission is to bridge the gap between tech and traditional finance to facilitate the institutional adoption of digital assets. On the short term, we will provide the first European gateway for institutions to trade derivatives on digital assets. On the midterm, we see ourselves becoming a leading market infrastructure in the space in Europe. And on the long term, our vision is to pioneer financial innovation not only in Europe, but across geographies and asset classes through tokenization and blockchain. Thank you very much for your attention. I will be more than happy to take any questions.
To our judges.
So I'll kick off. So product market fit, where you're going to be, what you're going to do makes sense. 2 things come to mind: regulatory and then go-to-market incentives. So on the regulatory standpoint, where you're going to be domiciled, where you want to operate, what geography do you want to own, and how do you overcome the regulatory dynamics? And then go-to-market, are you going to have a token? How are you going to incentivize people to jump on your platform?
Yeah, thanks for the questions. So as I said, so far we've been working with multiple European law firms in different jurisdictions. We will become an EU-regulated trading venue, which means that we will be based in one jurisdiction, but be able to passport our activity through, in other countries within the European Union. We have basically made a short list of jurisdictions that we believe would be a good fit, and right now we're heading towards the Netherlands, which is we expect to be based. The regulatory license process is actually can sometimes be quite cumbersome. This is exactly why we are happy to have advisors with us who have already gone through that process and are able to guide us. Now to answer the second question about the incentives, I would say $15 billion challenge in this case for an exchange is to provide liquidity on the platform. In order to do that, we of course need to incentivize market makers and liquidity providers to come on board. Here we basically use what we've learned from our previous institutional trading experience, and we want to set up preferential market maker programs in which market makers that commit to quoting on our exchange prior to our launch will get preferential treatment, and by that we mean rebates on their trading fees, where rebates can also even be a slight misnomer in the sense that negative rebates can also happen, in which case we would pay them for the liquidity they provide.
Can I ask you if the European regulator has ever issued a license to anybody to do this yet?
So not on the derivative segment. On spot markets, yes. You have exchanges that are now being set up in Europe on the spot segment, of course. From a regulatory standpoint, the application is the same because we will apply for an MTF
But not
license.
to do this, not digital derivatives, right?
No, not in Europe.
So
Correct.
you would be the first on Earth to get this, because I don't know anywhere else you can do this either.
That's correct. We will be the
So
first
your
one in Europe.
deal is all about getting cleared by the regulator, and you're optimistic that in 18 months you'll have that.
No, that's correct. Here again, this is an analysis we've done with law firms that have worked on these
You
topics.
pay lawyers by the hour. They'll tell you anything you want to hear.
No, that's a good point. I think there's also an interesting subtlety about our business from the regulatory standpoint. And because we list cash-settled derivatives, and we basically replicate derivatives that would trade on like any other asset classes, we fall under derivatives regulation, which is a regulation that already exists and where licenses are being given for other asset classes. The only thing that changes here is the underlying, though from a regulatory standpoint, this doesn't impact our business.
Yeah.
When you look at the derivatives market in Bitcoin today, the international, crypto native exchanges that don't offer spot that are not cash settled have 90% market share, and really CME in the U.S. is the only regulated exchange that has any volume worthwhile, where U.S. exchanges that have tried to upstart exchanges that have offered derivatives in the U.S. in a regulated manner have not seen any traction so far. Why do you think that is, and why will D2X be different in the EU?
That's a great question, thank you. So, multiple things. First of all, we are different. Okay, so actually I will start by clearing, because clearing is actually one of the main reasons why regulated exchange haven't gained much traction so far. A good example would be the CME, which actually has lots of traction on the futures segment, but not really on the options. The issue here, and this is feedback we've received from many institutions, is that because they clear trades, the margin requirements are very high, and this makes the whole experience very capital inefficient for them. By taking another approach that is tailored to derivatives and to the specific asset class, and by the way, we're looking at different alternatives to clear trades because there are many ways to do it, but essentially by doing that, we want to make the margin requirement much less heavy for these institutions, which will basically give them an incentive to trade on a regulated trading venue. Also in Europe, it is sort of out of question for institutions to trade on offshore exchanges, where actually most of the volume is right now. So what we expect is that as soon as regulated trading venues are able to provide an institutional grade solution, that most of the flows will actually shift towards these regulated exchanges.
All right. Thanks, guys. Good stuff. D2X. Okay. Up next, we have Moon. If you can make your way to the stage.
Right here.
All right. Come from back right.
Do we have the clicker?
Clicker is on that chair. There you go.
Can I use this?
All right. Well, hi, I'm Ken Kruger. I'm the founder and CEO of Moon, and we are building a Bitcoin challenger bank. Now, we set out to answer the question, what does it look like to live on Bitcoin? Now, I believe in the future we're all going to be living on Bitcoin. I think it's going to happen a lot sooner than you think. And if you're like me, you understand that living on Bitcoin makes sense, but it's not very intuitive. So we did the math. Now, if you run a Monte Carlo simulation on the historical price of Bitcoin and simulate living on Bitcoin, you'll find that 98% of the time you end up increasing your wealth. And with a surprisingly small amount of Bitcoin savings, with all the volatility in Bitcoin, you'll always be able to pay your bills, and 98% of the time you will grow your wealth, as opposed to if you've been living on dollars. Now, you may remember us from 2019. We were the company that let you shop on Amazon with Bitcoin. You may have wondered what happened to us. Well, one day we hit the front page of TechCrunch, and everybody loved us. Except for Amazon, they sent us a cease and desist. So we had to shut down the product. But all was not lost. A few months later, we secured a partnership with Visa. And we spent all last year integrating with Visa and our partner bank. And now you can pay with Bitcoin anywhere Visa is accepted in the United States. It's a little bit different from some of the other products on the market. One, we're very private. There's no KYC. It's pretty much the most private way you can make a Bitcoin payment on the internet. Two, we're very secure. We're non-custodial. And three, there are no fees. So this is our browser plugin that we have. Allows you to create a Visa card, load it with Bitcoin, and spend anywhere Visa is accepted. It's very simple. So far, it's going great. We've had 8% week over week growth in transaction volumes. We're in the top 5% of all browser extensions. And what's really exciting to me is that 70% of our user base is overseas, Latin America, Africa, people who don't have access to traditional banking infrastructure. They are finding Bitcoin and using Moon to solve their payments needs. But this is just the beginning. We're building out a full-featured platform to live on Bitcoin, right? And it's, what's unique about this is that we're taking a hybrid approach, right? So if you are brand new to Bitcoin, we'll help you get your first few sats. But if you are a Bitcoin OG and you want your privacy and be your own bank, we can help you with that too. We can handle that entire customer journey. Now, the way I see it is you have platforms like Coinbase and Binance for trading. You have BlockFi and Celsius for loans and staking. But what about living? You don't live on your E-Trade account or your brokerage, right? In the same way that banks allow you to earn, save, and spend dollars, we help you earn, save, and spend Bitcoin. And we're doing a bit of a hybrid approach where it is custody optional. It is KYC optional. We are allowing you to have the maximum amount of privacy allowed by law without KYC. Anything else, you got to do KYC, fine, but it's never been done this way before. Yes, we are fully compliant with all state and federal regulations. We're really proving out a new risk model. We're saying you don't have to sacrifice your privacy for security. And so far, we haven't had any issues. So initially, we're going after the $3 billion of crypto that's spent every year on gift cards. That's generally what the unbanked and underbanked and privacy-minded people use to make their purchases because they don't really have any other option. Since we're launching the first Visa card you can load with Bitcoin without KYC, we're going to do pretty well there. But eventually, as we build out the rest of our product offering, we enter the larger card payment space, which is $7 trillion in the US alone. Now, if you look at the crypto payments options on the market today, everyone's trying to balance between these two pros and cons, right? It can be private, non-custodial, gift cards, merchants that accept payments directly, but you can't shop everywhere. You want to shop everywhere, you need a credit card, a debit card, you need 17 forms of identification, a selfie with a hand gesture, your mother's maiden name. You know, that's ridiculous. It doesn't work if you want your privacy. It doesn't work if you're unbanked. We are the only company that has the best of both worlds. You compare us to banks, it's a totally different story. They're centralized, they custody your funds, they don't give you privacy. We're the complete opposite. Now, I'm super happy about the team we've put together. To tell you a bit about myself, I studied computer science at Cornell, financial engineering at Columbia. I was a software engineer and product manager at Lockheed Martin, where I worked on the Ohio-class nuclear submarine. Super excited that Rich joined us just recently as our director of engineering. He previously managed a team of engineers at a company that was just acquired. I can't say how awesome our team is. So this slide is a little bit outdated. We actually have $1.1 million committed to our current round of funding. So we are looking for people that believe in what we're building, want to support us in this mission. We'd love to talk to you, or if you live on Bitcoin and you want to help guide our product decisions, I'd really like to speak with you or talk to one of our team members, people in the audience wearing hats that say Moon on them. Happy to take your questions now.
I have a question about the way that, by the way, congratulations with the partnership to Visa. That was an existential moment in your company's history. What I'm curious, though, is with Visa fees, the way the merchant network works, how fundamentally tied to Visa are you? Is there a product roadmap that you can envision that's works when it makes sense with Visa, but also uses the network itself in the ways that bring the value there?
Yeah, absolutely. So, right now we have to use Visa because you want to be able to pay everywhere, have that be convenient. Eventually we can intermediate. We can offer merchants an offering directly, or just allow people to make payments like any other Bitcoin wallet. Yeah. So we're not fully dependent on Visa.
Where are the fees? Obviously, if I'm a vendor selling to your card, I want fiat. I want USD back.
Yeah, so if you are a merchant, you don't have any clue that anything with Bitcoin is happening. It just looks like any other credit card payment.
But how does Moon make money? How many bips do you take on the conversion back to fiat?
We get 145 at scale.
Okay, so there's the fee. There's the friction. How much does Visa keep?
That is excluding Visa's portion.
So it's going to be like 2.4% or something, right?
Yeah, it's the standard fee that the merchants pay.
What about awards and all the other crap people get on campus?
There's a lot of other things that we can do. There's a bunch of other revenue.
You haven't done them yet, right?
We haven't done them yet, no. Right now, it's primarily the interchange is our main
And so
sponsor.
the only reason a consumer would do this is they want to take their coin, put it on this card, right?
Yeah, they want to spend their crypto.
I don't understand why Visa needs you.
Visa is a B2B business. They don't have any consumer-facing products. They only partner with fintechs and banks.
Got it.
So can you talk a little bit more about user behavior in terms of how the initial users, you talked about gift cards, but just that journey of, just the popular narrative is like, it's the pizza Bitcoin story. And so I would imagine part of this is sort of changing or educating the market. Can you talk a little bit about what you said in the beginning about that Monte Carlo simulation and how the user behavior you think will evolve over time?
Absolutely, yeah. I think, in the Western world, we have banks and everything's good. Currency is not, having hyperinflation, at least not yet. So, I think here it's not very intuitive. But if you are in Argentina, Venezuela, Colombia, Brazil, Nigeria, these companies are adopting crypto extremely quickly, and it is solving a problem that they have. Like, for example, if you are in Nigeria, it doesn't matter how much money you have, you can't get a Visa card with more than $100 on it. You can be anywhere in the world, we'll give you a $1,000 card. So that's a total game changer to people in Venezuela, Argentina, and Nigeria. And we get emails from them all the time saying, this product has changed my life because now I can make payments when before I could not. So it makes a pretty big difference for them.
Have you figured out your customer acquisition cost yet for every incremental card? Do you know what it costs you to acquire that customer?
Yeah, we haven't figured that out yet. Right now it's all word of mouth. We haven't done any paid acquisition.
Did you disclose the total number of cards issued yet?
Yeah.
Did you say that?
We've issued 4,200 cards in the past.
4,200?
Yeah.
Okay.
Sure, I guess.
Go ahead.
Yeah, so you have to factor that into your capital gains. It is considered again, I'm assuming you're in the United States, that is considered a taxable event. But consult your accountant for that. So technically it's a purchase, or it's being converted to fiat, so it is considered, for the user's perspective, that is considered a trade.
Does your statement provide that data for every
Yes,
individual?
yeah, we can export that. You can import that in all the most popular tax prep software.
Because it's a good question it's got
Yes,
there.
yes.
You've got a lot of other Bitcoin credit cards launching in the next few months with BlockFi and
Sure.
Gemini and FTX. Is the primary differentiator here the privacy aspect?
Privacy, non-custody, and no fees. For example, Coinbase's card, they say no fees, but they actually have a hidden 2 to 2.5% fee on every transaction. And they're targeting, the U.S. market, and it doesn't really help people who are overseas.
Are you now restricted to Visa only, or can you take this to MasterCard as well?
So we have an exclusive agreement with Visa in North America, but internationally we can use whatever payment network we would like.
And
So-
go ahead. Does that exclusivity run both ways in terms of are they working with you? Yeah.
No, unfortunately,
Yeah.
I'm too small to negotiate a deal
just
that
had to ask.
So really, this is about scale now. 4,200 cards is nothing. So now you got to blow this thing up. So how do you do that?
Yeah, so the big thing we're focusing on now is growth. So initially starting with product-led growth. Like right now, this is just a browser plugin, and we don't even support on-chain Bitcoin payments yet. This is just Lightning, and we're integrated with Coinbase also. So we're adding on-chain payments. We're gonna have a web app, a mobile app. We're gonna have a physical card. So initially that product growth, and then beyond that, we're building in network effects to the product itself, so that this is gonna incentivize people to expand the product to other folks they know.
So I'll just, since probably everybody's thinking of it, are you gonna have a moon coin?
No. no, we're trying to avoid that. Some people try to convince us of that, but I don't think that's necessarily in our wheelhouse.
I have to ask.
That team you showed, who is running marketing?
So it was, I don't know if I can go back here, but we actually just brought on a growth manager, or head of growth, about 3 weeks ago.
Where'd they come from?
Just graduated Columbia, previously worked grad school there, and then he just previously worked at another fintech company doing growth.
Because this is all about customer acquisition.
Yes, 100%.
That's it, the whole deal.
Yeah.
And that person's never done this before.
He has, oh, here we go. Abhinav, right here. Yeah, he worked at Leap Finance doing growth.
Okay.
All right. Moon.
Well, thank you so much. Appreciate it.
All right, guys. Don't kill it, man.
It's emphatic, no coin, no token.
It's a Bitcoin conference, right?
It is a Bitcoin conference. All right, up next we have 24 Exchange. All right, 24 Exchange.
How you guys doing? Good afternoon. Thank you very much for your time today. I'm Dmitry Galanov. I'm CEO of 24 Exchange Bermuda. We are a company based in Bermuda. We're domiciled in Bermuda. We're currently operational. We've been operational for over a year. We're trading foreign exchange. We started with non-deliverable forwards, which are products that you use to trade emerging market currencies like Korea, Brazil, and so forth. And we recently launched spot, which is euro-dollar, for example, more like G10 currencies, and swaps. I've been in business for over 20 years. This is my 5th platform. I had successful exit with the previous platform called Fast.
It's about to get up there. I want to make sure that it's fully formed.
So the reason we're here is the fact that the crypto market has a problem, and you see on the left side, you see all these banks. We have those banks, so they're trading foreign exchange with us. We have 37 big banks, asset managers, hedge funds. So cream de la creme. And basically, they called us and they said, Dmitry, we have a big problem. And I said, what's the problem? They said, well, our customers, they want to access and they want to buy and sell Bitcoin, but we can't offer that services. And what happens instead, money is leaving and it's going to Coinbase, it's going to Gemini, but we need to offer the services. But I said, well, why can't you offer the services? Well, they said, because we can't touch the physical instrument. There is a KYC, ML problems, poor infrastructure, governance problems. They go down. It will take forever for our lawyers to get comfortable with touching the physical stuff. Okay, so how are we going to solve the problem? Well, the problem is solved by using instrument called non-deliverable forward for this instrument. This actually instrument has been used by the banks from 90s. And that instrument is specifically used for trading something that they can touch, which is currencies of emerging markets. So basically, the way instrument works, you don't actually even exchange the underlying asset. You bet on the movement. So let's say you long a currency. A month from now, you look where the currency is, and a winner transfers to loser dollars, US dollars, just wire money, and that's it. So it's very, very big market, actually. If you look at non-deliverable forwards and foreign exchange, it's, trades about $500 billion a day. What we think what we have here is the solution to this problem for the banks. And we discussed the solution with several banks. We have two very large global banks that are investors. So we have one that's huge New York bank. You probably see branches on every corner. And we have a huge UK bank that's investor in us. You'll see probably their branches in every emerging market country. So basically, they already have the order flow from their clients because their clients, they want to trade. They just can't offer them. And we essentially have a guaranteed customer base. So they have already access to CME futures. Somebody asked, well, the CME is there. Banks have access to CME. Well, the CME is relatively liquid. I know they've been very successful, but if you compare CME to larger physical market, it's very small. So when a big bank comes in and tries to buy $1 billion a day of something, they're going to move the price, which is not good. So they're looking to expand the access to liquidity outside of CME, and that's where we come in. Our bread and butter is NDFs in FX, and so it's very easy for us to extend that into the cryptocurrency market. So a little bit about us, why we can do it. Number one, this is my 5th time. So I've built very successful platforms in US equities, and this is my multi-asset venue. My partner, Jason Worst, he's here. He is from Bridgewater. He was head of global execution desk at Bridgewater for many years out of Connecticut. They trade multiple asset classes, 24 hours a day. There's another guy from Bridgewater that runs our operation, Mike. He used to work for Jason. We have a lot of advisors, very established advisors and board members, including from the bank. But we also have ex-head trader before Jason, the previous head trader of Bridgewater, on our advisory board as well. So our background, we really know what we're doing. We have customers. They all papered. And really, in terms of timing, in terms of regulatory perspective, we are domiciled in Bermuda. In Bermuda, if you want to trade crypto assets, it falls under DABA law, which is digital asset law that they passed in 2018. We do have 24 Exchange also have entities in Miami and in London. But for this particular reason, we picked Bermuda because our existing clients are trading foreign exchange with us. They're already connected to our Bermuda entity. So we have all the paperwork, we have all the infrastructure. So it's very easy for them. They don't have to change much to expand into cryptocurrency NDF. However, in Bermuda, if you domicile in Bermuda, in order to trade cryptocurrency and cryptocurrency derivative, you have to have exchange license. And so what we did, we applied with the Bermuda Monetary Authority for the exchange license, and we expecting to get it in July. At the same time, we aligned 5 big market makers to provide liquidity to our strategic partner bank and other banks. So they are in process of connecting. So I think in July, it's all going to take place, and we can extend our state-of-the-art software into crypto. And again, it's very easy for us. We're foreign exchange people. We have a trading desk staffed with Bridgewater guys. We do it every day. Currently in foreign exchange, we do about 500 million a day. But what's exciting for us about the Bitcoin is that the profit margins are much higher. So for example, in NDFs only charge half a basis point for this. Because it's institutional, we're still going to be super cheap. We're going to charge 5 basis points. But it's 20 times more than NDF market. And the second bit what we're excited is that it's very volatile. And the exchanges, what they do very well. There's volatility, as long as it can stay up, right? If the exchange stays up, then when it's very volatile, they do a lot of churning. And so the exchange really, they don't take risk, nothing. The more churning, it goes like Easy Pass. The more cars go, the more money they make. So we think that, with our expertise, we can provide real solution to this bank. There's nobody else providing this solution. We already agreed with them on the contract, on their contract. Nothing that before us was defined. So we actually created non-deliverable forward contracts for the banks and market makers, and they're all happy. We're going to use CME reference rate as a settlement, so we're going to settle based on CME. All the banks have CME access to the market data. They have the information. It's very easy. All their back offices.
All right.
So we're very excited.
Let's send it to the judges.
Yeah, we're actually about to go up.
Interesting.
Thanks. 24 Exchange to the judges.
Thanks.
So I have a question about the assumption here from your experience in Forex markets. I love that there's maybe a new kind of contract bringing liquidity to Bitcoin and crypto markets, but I thought that I was hearing that this has never been done before. Can you point to other markets around the world where this specific kind of contract is being used? I'm not familiar with it.
There are in retail market, there are contract used by retail broker called CFDs, contract for delivery. The big difference between and that's how typically the derivatives are traded in the retail market. The difference between contract for delivery, CFD, and non-deliverable forward is that the terms of the settlement for contract and delivery, the broker dictates. So if you own the account with the broker decides what price the Bitcoin closed at and how much money you make. In the institutional space, with the NDF contract, it relies on independent benchmark, which is CME closing price. And so it's very fair, it's independent, and then let's say if CME is not available, there's a whole procedure of what do you do. So it's much more kind of organized, institutionalized, and then the NDF market versus CFD market is more whatever broker decides.
So it's a quick follow-up question. In your conversations around this kind of contract, do you have a sense of what this market might be sized, what the demand is for this?
Well, we have one of our strategic partners told us that they have more volume than CME can handle. That's why they're doing it. So it's from one guy. I think we expect, if we get 3 banks on, I would expect next 12 months to do about $1 billion a day.
Are any of these wirehouses in the U.S.? These
Yes,
banks?
yes.
Okay.
We have the demand comes from the U.S.
So are you disclosing which wirehouse in the U.S. is an
We-
investor, or they're going to put this? Because what I'm wondering is the FX desk in a wire is a regulated desk. It marks to market every day. It's regulated, and I don't. Is the U.S. regulator on board for
Yeah,
this?
well, the NDF market is regulated by in U.S. by CFTC.
Yeah.
So big banks, they have a designation, what they call swap dealer. And so what happens is when you trade NDFs, there is certain reporting. They report to the government certain details. What is the midpoint
So
and so
this
forth.
U.S. wirehouse, their compliance group has approved them to trade this or
Yes.
just invest in it?
Yes.
To trade it? To trade it.
Yes, 100%. There is actually a quote, from that wirehouse on May 18th. There was basically a shareholder meeting, and the CEO of that wirehouse literally said that our clients want it, and we're in the process of getting them there.
And are they investing in you or just using it?
They not using it. It starts in July because there is nothing like this exists. Right now, they can't touch Bitcoin at all. Only CME, the only one venue they have, can touch the CME. We would be number 2 venue. And with much bigger access to liquidity because we will access actual physical. And so what we do, we create a bridge between the banking system, the banks, and the physical system. And we take that liquidity from the physical system and we'll push it up to banks.
Besides Bermuda, what other industry things are you
Well, we have companies in 3 jurisdictions. One's Bermuda, one is US, and London. And so the reason we do that is for kind of an arbitrage. So if something happens in Bermuda, we can move. The reason we preferred Bermuda for cryptocurrency product is because our existing clients already negotiated, legal paperwork and so forth for Bermuda. So if we have to, basically, let's say something happens to Bermuda, we have to move. We have to repaper those clients, and it's going to take some time. At least, probably 6 to 9 months. But worst case to worst, we can move it. Now, if we move it to the United States, we would have to register a SEF because it's under CFTC. It wouldn't take that long to register a SEF.
Do you think you'll get other U.S. wires under this Bermuda license? Do you think others will follow this first one?
We have already them. They want to do it. They working on it right now.
You cleared.
It's not like if it's happening.
Yeah.
What do you see as the biggest risk to this going live in July, like you mentioned?
The biggest risk is, so what happens is, let's say you call Goldman Sachs and you say, I want to buy $1 million of Bitcoin. So what happens is the Goldman Sachs would write you a derivative, essentially, and says,
Nice job on your
if Bitcoin
presentation,
go
man.
up, you'll make money. If it goes down,
I had never heard of
lose money.
Moon,
But then what
definitely
happens?
looking
Goldman
into it
Sachs
now.
has
It's
to
an
turn
awesome
around
stuff.
and hedge that derivative, right? Because now you have a risk with you, they have to hedge it. And so when they turn around and go to physical exchanges, they have to pre-fund the purchase. So now imagine the big numbers. Let's say you have a bank that's coming in every day with $1 billion. So whoever wrote the derivative to that bank now has to turn around and find $1 billion and go to Coinbase deposit and all these exchanges and finance the purchase. So basically, I think that's one big risk. We solve that. You can have solutions. You can borrow the money.
You could put a limit on your carry.
You can do CME futures. Sorry.
You could put a limit on your carry.
Actually,
Yeah,
just
but
in case I don't
just
see
think about it. Like you're a
after.
small market maker in Chicago, like in Chicago
I
market.
put all my
And bank
cards
comes
in my
in and says, I want to trade with you $1 billion. You go, well, I got to go buy $1 billion. You got to find $1 billion, buy it. Then next day they come in, I want to trade another $1 billion with you.
You had me at the beginning. I can't believe you have a wire that's given compliance okay to this. Like I live in a regulated world. I deal with this every day.
If we sign an NDA, I'll send you all the information.
We're going to go there, my friend. We're going to go there.
And I'm going to win the prize. I want the prize.
All right. Good cap. 24 Exchange. 24 Exchange, thanks.
So anyway, we're looking for $7 million for 10% of the company. So
We can talk. We can talk.
All right. Closing out with the juicy info. All right, come on. Thanks. 24 Exchange. All right, up next. Sazmining, if you can come to the stage.
I'll give you my card. All right. We have a lot of cards. There we go. Yes.
All right, well, to start, I think that we should give a round of applause to all the incredible organizers of this event. Without you guys and all the hard work that you guys are putting in, there is no Bitcoin 2021, people. So,
Hey, great start. I like that.
Getting us set up with this was a tremendous effort. Also, to all the wonderful judges, thank you so much for taking the time on this beautiful day in Miami. You could be hopping pool to pool, beach to beach, but instead you're here listening to me and Dustin run through the notoriously riveting subjects of energy waste and Bitcoin mining. Also to Mr. Wonderful, I heard about your recent interest in Bitcoin mining, and I would just like to say I'm a huge fan of Shark Tank, and I have some great watches in mind that I think might go well with that jacket.
Are your
here,
watches
so,
that are just in mine?
yeah, just keep that in mind as we're diving into it.
Okay.
All right, I'll get started. Our society wastes 50,000 terawatt hours of energy per year. Just to put that into perspective, the entire country of India only uses 1,300 terawatt hours. That means with just the wasted energy alone, you could power 38 Indias. It's clear that this is a broken model, but the question is not whether or not the humanity's consumption model for energy is broken. The question is, how are we going to fix it? Well, if we lived in a perfect world and we had the perfect magic bullet solution, and you guys were energy executives with excess power, I would come to you and I would say, listen, in this perfect world, we're going to get a buyer to just consume all of your excess power. That buyer is going to be buying from you 24/7. That buyer, if you guys want to shut him off and put that power elsewhere, give it to someone else, you are free to do so at the snap of your fingers. Also, this buyer will go to all of your excess power regions and be placed on your excess power assets. I mean, that's in a perfect world. But I'm here today to let you guys know that this has actually been invented. This is reality now as of recently. I know we're at a Bitcoin conference, so some of you guys may know where I'm going with this, but I'm telling you, if you were in a room full of energy executives, they would be on the edge of their seats right now. Some may perhaps even be foaming at the mouth, waiting to hear what your solution is. And the solution to energy waste is Bitcoin mining. Bitcoin mining checks all of the boxes. So, who's Sazmining? Well, Sazmining, we started in January of 2018, and the whole vision was we realized that we were still in phase one of this industry. I don't know about you guys, but the year 2140 seems pretty far away, and that's when the last Bitcoin is actually going to be mined. This is still phase one. How is phase one characterized? Phase one of Bitcoin mining is characterized by watching all of these Bitcoin miners going to the pockets with the cheapest electricity around the world where they're welcome. The cheapest energy, because the cheaper your energy is, the lower cost it costs you to produce Bitcoin. But that's just the first phase. Miners going towards that cheap power, going and using the excess wasted power that has no other use. Phase two, and this is the phase that we're extremely passionate about, one of the reasons why we recently brought on a solar guy, is that in phase two, Bitcoin mining powers renewables, or project development with renewable energy. Because Bitcoin mining gives the economics and the energy waste from renewables, allows it to consume that 24/7, and makes projects where the economics might not necessarily work out in solar, it makes them work. And when battery technology gets to the point where you can get down to that 2 to 3 cents, right now it's at about 7, that's when the switch is going to flip, and you're just going to see a flood of renewable projects coming into the market because of Bitcoin mining. So where are we today? How are we bridging this gap? How are we capitalizing on phase one of cryptocurrency mining, Bitcoin mining? How are we going to capitalize on phase two? Well, in phase one, you have to, of course, have the capability to build large-scale, massive Bitcoin mining facilities. It's a tall task in and of itself to build these large facilities. But then on top of that, you have to have the treasury management down. You have to be able to custody that Bitcoin. You have to be able to borrow, lend, hedge with that Bitcoin. You have to have the ability to liquidate that Bitcoin. And you have to have the ability to do it at scale. You have to have those relationships in order to do all these things, and that's just on the Bitcoin side. On the other side is the energy side, and this is a huge, huge, huge topic within Bitcoin mining. On the energy side, you have to have the relationships with those massive energy companies. You have to have the ability to look through their portfolio and find those needle in a haystack sites where you have excess power that is currently just being wasted. The emissions are already been accounted for, and now they're just doing nothing. So where are we today at Sazmining? Well, I'm happy to report that the first couple phases we've succeeded in. We've gotten the Bitcoin side, taking care of the relationships, trying to find the best operators. But then on the other side, we found the best energy companies we could. We found massive, massive energy companies and had the chance to sit next to them, walk through and comb through their portfolio to find those needle in a haystacks. Now, I'll ask you, Mr. Wonderful, do you think we found a single needle in that haystack?
No.
You're right. Unfortunately, we did not find one needle in that haystack. We found 2 needles in that haystack, Mr. Wonderful. We found 2, and that's what we're going to go through here. So the 2 sites are in Kentucky and North Dakota, both very favorable jurisdictions towards mining. This is extremely important. You want the economic development support. The economic development in both areas that we're speaking with, where these particular sites are, want us to come to their area. The other important thing is, of course, we've been talking about it this whole time, the low-cost energy. You want low-cost power to be able to operate these facilities properly. On top of that, you need scalability. Many times miners, they can find pockets of low-cost energy, but it might be half a megawatt to a few megawatts. It's not scalable. If you want to get real capital into this space and you want to industrialize this industry, then you need to have scalability for these mining projects. And then finally, grid connection. This is a huge sticking point because when you have grid connection, you can actually support the local communities that you're going into. You can go and you can do a demand response program where you can shed all of your energy by turning off your machines and contribute it to the local community. So all of the local ratepayers, everyone who's connected to that grid benefits from your project coming in and for you bringing in that capital to help strengthen the reliability of the grid. So today, we're at a point where we have these phenomenal projects lined up and we're on the next path of our journey. And that is what has led to this conversation that we're having today. The next phase is we have to execute the power agreements. We've got to put down the down payments on the miners. We've got to go and execute our purchase agreements and continue to grow the brand of Sazmining, all of which take capital. It's a capital-intensive business. In order to execute on this next part of the game plan, we're raising $15 million. The last piece that I want to leave you guys with is a sad reality, but it's the fact that there are over 900 million people globally that do not have access to electricity. And the projects that Sazmining is working on and will continue to work on in the future strengthen grid reliability. All the ratepayers that are connected to grids where Sazmining's projects are running get a more favorable energy rate and make the electricity more affordable. And the goal here today is find someone, a visionary in the space of capital who can look at this team and this problem that we're addressing and sees that it's not just about these two projects. These are the first projects that we will execute on, but following that, the vision is just as the Bitcoin mining industry is in phase one, Sazmining is in phase one of our company as a development. We're going to go and continue to work with our energy partners, continue to find low-cost power sites, and continue to build up this infrastructure to make a more reliable grid. So thank you guys all very much. I'm excited to dive into the questions with all of you.
Sazmining. To the judges.
So you said that you're going to raise $15 million. Can you talk a little bit about how long that lasts you or how you're going to deploy that capital?
Of course. I'll pass that off to our CFO.
Yeah, so the $15 million is an equity contribution to SAS. We have debt partners in place, ready to go. So we're looking at contributing about $7 million to each site to do miner deposits, infrastructure build out, and to get the sites operational. And then the rest would be debt financed through industry contacts that are probably in this room or are here this week.
Can I ask you a question about these two geographies, North Dakota and Kentucky? And the reason I got into this whole sustainability question and the ESG issues around mining was I had a deal very similar to this in upstate New York just last month when the state decided to threaten a moratorium for 36 months on Bitcoin mining, and all the financing dried up for those guys, gone. Now, how do you know in the case of North Dakota and Kentucky that the regulator, if you want to call it that, or the governor or whatever, isn't going to go into the same mode that New York did? What assurances do you have?
Yeah.
We've got two big things. First, we've worked directly with the Kentucky Economic Development. This is a direction from the state government to make this happen. They want this to happen in their state. Same with North Dakota. We've worked extensively with their economic development, and we're also part of their primary sector certification where they want us in their state. They've made it explicitly clear that they are going to be the epicenters of Bitcoin mining and energy consumption. They're very energy-rich states, and they want to keep it that way.
And
So
in
you
both
think
those cases,
that's a very low risk for you then?
and in both those cases, that was one of the main criteria, which is why we decided to go to those places. I mean, Kentucky, they're incentivizing through legislation to try and get miners there.
That energy from Kentucky, is it coming from coal? Where's it coming from?
Natural gas. That's part of phase one of what we believe, because you have all these excess energy assets.
So that's Kentucky. Nat gas, what about North Dakota?
Yeah, nat gas, and then they're also transitioning to renewables, so they're knocking down a lot of their coal right now.
So a lot of the power generation sites that we're partnering with in North Dakota were coal plants that have been repurposed to natural gas. And they see that that's the movement of the industry is that renewables, Bitcoin or not, that's what they want. They want renewables. So they have investment plans for the next 10 years to move solar and wind and start retiring those older natural resources type power generation.
So it seems like when you want to grow up, you want to be an industrial miner. You want to bridge this gap with some of these unique energy assets and translate that into Bitcoin mining. There's 20 publicly traded Bitcoin companies, 10 that are filing. What's your competitive advantage with all this demand for cheap renewable energy plugging into Bitcoin mining?
You want to get that one, Will?
Yeah, well, we have a number of different competitive advantages. One is you look at a lot of these publicly traded companies and they're in the business of purchasing the miners and going hosting them at other facilities, right? That's not a vertically integrated system, and the winners in this are the people who are the lowest cost producers. In order to be the lowest cost producer, you have to vertically integrate those different pieces within the value chain and then simultaneously be at the source of the energy production. So that's one. The other one is just the access to those different energy companies and the energy companies we're working with. We're the first company with some of these massive energy firms that have taught them about Bitcoin mining. We're the first ones that have explained the economics, how it works, and are the ones running these projects with them. So through those relationships, we think that that's a huge competitive advantage for continuing to go and scale. Finally, just from the solar background, I had mentioned Ken earlier. We brought him in from the solar industry. He actually came into Sazmining because he thought Bitcoin mining was the solution to expediting renewable energies and lowering emissions. He's been passionate about that for many, many years. And he went and sought out Sazmining because we were the company that was positioned to do this. And that's how he found us. He reached out to us and started trying to work with us. He's led Fortune 500 sales teams. And now he's helping us on the energy side.
Thanks. Sazmining.
Should I take it off here?
Thanks, guys. All right. Last pitch of this segment of the day. Bitex, can you make your way to the stage?
Hello, good afternoon. Thank you for the opportunity. We are Bitex. We built an infrastructure where money moves in real time in a fast and safe way. We want to restore people's ownership of their money by disrupting how funds are broadcast throughout LATAM. We were born in 2014 as a Bitcoin exchange, and we matured into a Bitcoin blockchain-based money network. We, like I said, long story short, 2014, we realized that there was a huge market, or a huge potential crypto market ready to be served in Latin America via already established delivery channels. So we built our exchange. In 2016, triggered by one special customer, a professional, an Argentinian professional NBA player, we realized that the cross-border infrastructure or payment infrastructure throughout LATAM was not ready to cater the specific needs of the region. So we started building our own local money network. By 2019, we realized that we could sell that network as a vehicle, as a service, for financial institutions, and we had the lucky opportunity to sign a joint venture with Transbank. Transbank is one of the biggest financial players in Chile. They are owned by 8 banks. So we started providing them remittances as a service for their 4 million users in Chile through their OnePay app. So as of today, we are focusing on serving all these lines of services or business through one single API connection, trying to, focusing on that business development and trying to synergize our 3 lines of business. We have an exchange. This exchange is focused primarily on financial institutions and corporations in order for us to give them, their customers, access to save in crypto or trade crypto without the hassle of having to set up an exchange. So this works. We have built our own ramp up and ramp down for this exchange throughout Latin America. We have operations in Argentina, Chile, Uruguay, Paraguay, Peru, and we are opening right now Colombia, Mexico, and Brazil. So on that infrastructure, we serve the cross-border payment solution. This cross-border payment solution works without the use of US-based intermediary banks. So there's around $70 trillion traded throughout South America that necessarily right now have to go through US-based, US dollar transactions, MT103 SWIFT network. So we replace that with this solution, aimed specifically to, to corporations, financial institutions, and high net worth individuals for cash management purposes. And at last, we have the remittances as a service we provide exclusively to financial institutions for them to make able for their existing customers. They have already onboarded via their already established delivery channels a new service using our infrastructure. So looking into the future, we want to become the biggest crypto infrastructure provider using crypto in Latin America, and we are working towards doing so. To achieve, we have reached a breaking point regarding velocity of deployment, and we understand that we are, to achieve this objective in a timely manner, we need capital. So we want to increase our footprint throughout Latin America. Like I said, we already have operations in a set of countries. We operate in more than 70 countries globally. We want to replace some of our partners in the US, in Europe, in order to increase our traded volume or our process volume. Sorry. We are a committed team of all-terrain managers. We have been operating this company for the past 7 years in an organically and very smoothly. We actually make profit, and shares are very well distributed between key stakeholders of the company. We think, well, actually right now we have key players in the financial markets that are really interested in our solution. Actually, we have right now 2 major banks, regional major banks, one Brazilian and one Spaniard, that are integrating our infrastructure. So we think the market is ready to be served. We are eager to deliver. We have a waiting list right now for integrations. So the question would be if you want to hop on this rocket, basically. Thank you very much.
Thank you, Bitex. To the judges.
So who are your key competitors in Latin America?
Actually targeting specifically this segment, I mean, Bitso is huge. They have this segment targeted, but not specifically as we do. We actually have this deal with Transbank in place and actually executing right now. And like I said, we have 2 other major banks that are integrating our services. So there are competitors. We have beaten them, at least for now, in the time to market. So we have the deals in place, and we are processing volume.
What regulator are you under, and how many licenses do you have? Because you've got a bunch of different services there.
Yeah.
Are they all licensed, or are you waiting for some licenses?
Yeah, the thing is like this. We have a several amount of licensed local MSB. We have segregated the risk. So we have local MSBs as a Western Union to cash in and cash out for every service. This is the one that makes the agreement with the local entity, the local financial entity. So they communicate via our infrastructure, our software layer, on top of the Bitcoin blockchain. So we built an operational, technological, and financial solution, end-to-end. Local banking system to local banking system, local wallet to local wallet. We have devised a way to interfungibilize, I mean, to make fungible closed money networks in different countries.
What country are you incorporated in, and under what regulator is that corporation allowed to function?
We have licenses in Argentina, Chile, Peru, Paraguay, Uruguay, and we are opening licensed entities in Colombia, Mexico, and Brazil. The exchange works out of Netherlands and Antilles.
Out of the Netherlands?
Yeah,
So-
Antilles, offshore.
Okay.
So and the service center is in Argentina. I'm an Argentinian. That's why my English is like a little bit rough.
So your vision is to scale in South America. That's the plan.
Yeah, to connect. I mean, South America is very bad served. I mean, there's a lot of a huge market to serve better. You know. So yeah, our target is that Latin America to the world.
Can you talk about how your volumes are currently?
Annual run rate 560 million.
Per day?
Yeah, to date.
What's your average across all these services? Are you making 75 basis points, 100 basis points? What would
We average. I mean, we have different pricing for different.
No, I understand, but just if I looked at $1 million of transactions on aggregate, what would I be making? How many bips do you make?
1.25, more or less.
And Western Union is your biggest cost in terms of if I'm the customer, I'm paying them more than you?
It depends on the line of service. Customer acquisition per.
Because they don't do anything for 125 basis points. Those guys gouge like hell. That's what makes them special.
But the average entry basis point for the, I mean, it's 7% in South America. You
Right.
$200 throughout South America. You
No,
have
I
to
know.
pay.
That's what I love about them.
So
Yes.
that's the thing is we set up the relationship with the financial institution. We charge them 1.25% for a lifetime agreement, and they can mark up on top of that.
But I mean, the whole idea of this is how do you get around a toll booth at 7%, which is usury? It's ridiculous. It's so expensive. This doesn't really solve that problem. The off-ramp and on-ramp is still Western Union, right? That's the problem with this? Is there any way to get around it?
Around what? Sorry.
I don't want to pay Western Union anything.
Yeah, you use us. I mean, you don't have to pay Western Union.
So you're comparing yourself to their service. You don't actually use them. You're not in the model, right?
Yeah, we are like back office provider
Yeah.
for financial institutions to serve a remittance service to their customers to compete with Western Union or TransferWise or whatever other for the end user. We do not serve the end user. We are like a bulk provider.
Right, I got it.
And we have the same licenses Western Union has. And we integrate everything, and everything is available API, via API 24/7, 7 days a week, 365 days a year. So everything is interconnected.
All right. Bitex, thank you. Closing things out. Good job. All right. We're going to give the judges a few minutes to deliberate here before we announce the two winners of the infrastructure section of Pitchday at Bitcoin 2021. If we could turn these mics off up here at the table, we'll deliberate here. All right. Our judges have made their final decisions. Judges, if you can make your way to the stage, we will present the winners here. If the judges could make their way to the stage. Been told by, stage. So we can get this on nice video. All right. Pitchday Bitcoin 2021. All right. We're going to start with our second place winner this time. No shame in being second here. Second place, best in class, Bitcoin 2021 Pitchday infrastructure segment is Moon. All right, come on up, guys. We have your nice Bitcoin trophy here. You can go to the middle and get some photos. Yeah, grab a couple. Yeah, tennis style, whatever your sport of choice is. Judges, if you want to get around. Yeah. All right. Moon, congratulations. And first place, infrastructure segment of Bitcoin 2021 Pitchday. First place, 24 Exchange. That was a sporting event reaction there. There we go. Yeah, there we go. Come on up. Come on up. Here, take the middle. Yeah, get in the middle here and grab a couple photos. .24 Exchange. All right, all right. Thanks everyone for coming and watching. This concludes Pitch Day at Bitcoin 2021. Over 175 applicants. You saw the best of the best. And closing it out is 24 Exchange with the win. So right now, things are kind of concluding on the main stage inside. Whale Day continues with a happy hour. If you want to make your way back into the regular conference area for drinks and some food. All right.
That the jukebox, yes. This over there, yes, the jukebox. Very sure.